Hello everyone, let us continue with the next source of finance, that is debentures. It is the long term as well as part of borrowed funds and externally generated. So debentures, first of all, let us discuss what do we mean by the debentures. Basically, debentures is the acknowledgement by a company that it has borrowed a certain amount of money and it will be paid on a particular date. The holder of debenture will be provided with a certain amount of interest. So debenture holder, the status of debenture holder is a creditor. Debenture holders are paid at a fixed rate of interest at the specified intervals. So if we compare about the share and a debenture, so the status of a shareholder or the person who is holding the share is the owner, and the person who is holding a debenture is a creditor for the business. Whereas the debentures is a part of borrowed fund, and the shareholders shares, these are the part of the owner's fund. Now, what are the merits of debentures? It is preferred by those debentures who want a fixed income at a lesser risk. Company has to pay the interest either it is having a profit or a loss. The interest on debenture is definitely to be paid by a company. And debentures are issued by the company when the sales as well as earnings of a company is a stable. But the debenture holder do not carry any voting right. That means debenture holders never participate in the decision making process of a company. Issue of debenture doesn't dilute the control of equity. Does not dilute the control of equity means they never participate in the decision making process of a company. Financing through debentures is less costly as compared to the preference shares or equity share capital. That means if any formality, lots of formalities are to be done while issuing the debentures, and cost involved in that formalities is comparatively lesser than the equity share capital and the preference share capital. Limitations of debentures. The limitation of debenture says that it is a permanent burden on the earning of a company. If a company wants to expand its business and it wants that the profits are to be retained, but it cannot retain the profits. As a fixed charge instruments, company has to pay the interest in each and every situations. The second situation is, or the second limitation is that in case of redeemable debentures, that means debentures which are to be paid after a certain time period, that company has to make the provisions for repayment. Suppose the company has to pay rupees 10 lakh or 5 lakhs after a certain time period, that which is 2 to 3 years, 4 years, 5 years. So after making payment for 5 years, that means when a company has to pay 10 lakh after 5 years, so definitely it has to make a provision for repayment on specified date every year. It's not like that at the end of 5th year, company will withdraw 5 lakh from its bank or 10 lakh from its bank balance and repay to its debentures. So every year company has to make a provision for repayment. If there is any financial difficulty, then it creates a problem for the company. And the next one is the company has certain borrowing capacity. Each and everyone is having a certain borrowing capacity. If a company has borrowed 10 lakh rupees and company is having a borrowing capacity of 15 lakh rupees, now company can borrow even 5 lakh more, not more than that. Or in this way, with the issue of debentures, the borrowing capacity of a company reduces. Secured and unsecured debentures. Secured and unsecured debentures means when some security is put against the issue of debentures, that means it is secured debenture. When no fixed assets are being mortgaged for the debentures, that means these are unsecured debentures. So secured debentures means automatically, according to the Companies Act, when the debentures are issued, the fixed assets are automatically mortgaged against the debentures. So in routine, usually the companies issue the secured debentures. Registered and bearer debentures. Registered debentures are those by which the bearer of the debenture holder name is mentioned by the company in a certain register. When these are to be transferred, it will be transferred with the intention, with the notice of a notice to the company. If this kind of notice is not given to the company, then these debentures are called the bearer debentures. Convertible debentures, convert as its name is indicating, like the preference shares. If the debentures are converted into equity shares or preference shares, these are called convertible debentures. If these are not converted into equity or preference shares, these are called non-convertible debentures. Means after a certain time period for which the debentures are being issued, by returning the debenture, the debenture holder can get equity share or preference shares. It will be called convertible. Otherwise, it will be called non-convertible. The last one is first and second debentures. When the debentures are repaid before other debentures are issued, these are called the first debentures, and second debentures are those which are paid after the first debentures have been paid back. So these are the four types of debenture. Next we will go for commercial banks and financial institutions. Thank you.